So glad you could join us here on the Market Day Report. I'm Marlon Bowling with you, and we are going to take a look at your grain market action here in this particular segment. And boy, they got off on a great start this morning after some export sales numbers from USDA. We can kind of flash those up on the screen here so you can take a look if you're viewing at home. Tremendous numbers. Corn export sales of 2.66 million metric tons. That was over 500,000 above the highest trade guess. My goodness. Soybeans, 946,400 metric tons. That was in the upper third of the range of estimates. We had soy meal at 273,000 tons. That was in the range of guesses. Soy oil, 9,600 was in the range of guesses. And the wheat, a good number there, 806,600 metric tons. Haven't seen a number like that in ages. That was over 200,000 above the highest trade guess. So the market has been responding positively up to this point. We'll go to Chicago and get some analysis here on what the grain trade is doing. We'll check in at the CME Group in Chicago with OlverSloup. He's with iiTrader. And Oliver, good to visit with you once again. The corn market just came roaring out of the gate after a flat overnight trade. But then at last check here, we had kind of weakened up 2 or 3 cents. So tell us what's going on.
Yeah, they really took off this morning. I was in the middle of writing our morning reports for clients, and then 7:30 rolled around. You saw about 4-cent bid come into the market, really prop up that July contract above technical resistance, and that's really set the tone throughout the day here. We saw a little bit of profit taking a little bit ago from the longs who've maybe caught this move higher, some long liquidation coming into the market, but that level held. 386 to 388 was previous resistance. We saw that about 30 minutes ago come in as support. So that's going to be a very key number to watch on a closing basis. That's a Fibonacci retracement as well as the 200-day moving average. So that's going to be the number you're going to want to watch for the close.
Got to love those Fibonacci numbers. A lot of folks pay a lot of attention to those. So the corn is roughly about 7 cents higher right now on the soybean trade. We'll look at those futures here. And we did have an adjustment by the International Grains Council revising downward their production estimate from Argentina, I guess. We have July soybeans currently 13 higher at 1041.5. Pretty good size range there between 1046 and 1018 on the July contract. New crop November soybeans currently 13.25 higher at 1016.75. How much of this is related to outside our borders support into this soybean trade here today, in your opinion?
I think there's quite a bit that has to do with what's going on abroad, but I think a lot of this is still kind of emotional trading. Volatility oftentimes invites more volatility into the market, and we've definitely seen that really not just in soybeans, but outside in the corn and the wheat market as well. Just it's gained a lot of attention here, and you have a lot of emotional trading and emotional hedging. People are kind of looking for a headline. At the end of the day, I've been telling my clients there's no particular reason why we're trading up 3% one day and 3% down 3% the next. This is the tug of war between price discovery, the bulls and the bears. So I wouldn't be surprised to see the volatility eventually come out of this market, but that might take a little bit longer than some are hoping for.
All right, as we look at the wheat trade here today, of course, we had that weaker U.S. dollar that was helping out the wheat. We have July currently 7.5 higher in Chicago at $4.91 per bushel. That's still almost a dime off of its earlier low, so still a good performance in the wheat. Of course, those strong export sales are helping. On the Kansas City wheat, we had July now at $4.7925. Only up 2 3/4 cents on the day. We have Minneapolis spring wheat trade right now on July, currently at $4.7925. That would be up 2 3/4 cents on the day. And if we look at the cotton market, we had real disappointing export sales numbers on the cotton, and July is currently down 26 points at 63.89 cents per pound. We're going to pause for a little break, and when we come back, we'll be talking with OlverSloup about today's livestock market action. You don't want to miss that at all. Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you, and we're having some fun talking with OlverSloup. He's with iiTrader, and he's there at the edge of the trading floor in Chicago. Well, we talked about the export sales on the grain side being excellent today, and you can say the same thing about the pork export sales, but not so much on the beef today.
Yeah, the beef really taking it on the chin. We saw some late day numbers yesterday come in a little bit with a bearish tone, and we're seeing that definitely play out this morning. We gapped a little bit lower. You know, earlier in the week it looked promising. We had some good breakout technical levels that we were looking at, but now we're definitely seeing that selling pressure come into the market. At the end of the day, this is a bearish trend since the beginning of the March, and I think we're going to continue to see that play out. If we take out contract lows in that June contract, that comes in about 113.90. 109.90. There are some people say 107 is in the cards. I think at that point you might see some capitulation style trading, see bargain buyers step in and take us into a season that typically has higher demand into July.
Well, Oliver, as we're showing the prices here to our viewers at home, we have just now hit limit down on April and June live cattle. Of course, the April contract expires tomorrow, or last trading day tomorrow, but June down $3, limit down at 114.80. Of course, you can't go any lower than that. August down 282. Not that far from a limit move. We're now at 111.88 on the day. On the feeder cattle side, they've been flirting with limit down moves today. We're not quite there, but man, we are close. May feeders down 440 at 140.68 per hundredweight, and you have the August contract down 435 at 139.95. That doesn't look especially good heading into the closing session here.
No, it's never good when you close towards the lower end of the range. Nonetheless, near limit down, if not limit down. It doesn't really bode well taking us into tomorrow's session. Hopefully there is some light at the end of the tunnel. The RSI, or the Relative Strength Index, is starting to get towards those oversold levels. But despite being down significantly today, we're not yet oversold. So there may be a little bit more selling pressure to come in the near future before we see any sort of relief rally.
There's a survey done by the Wall Street Journal on the retail meat prices, and in that latest update that just came out a little bit ago, the beef prices actually increased by 2 cents a pound on the average retail beef cuts, and on the pork, the price was down 17 cents last week, down to 302. Chicken prices stayed the same, so actually it looked like demand increased a little bit for the beef last week, but you wouldn't tell it by looking at the futures trade here this week.
No, definitely not. But I think we're starting to get that time of year where you're going to start see demand uptick become more of a trend as we continue throughout this month and really into May and through July. I think demand, I hope, fingers crossed, will start to pick up and support these prices.
All right, let's look at the lean hog trade. And on the futures board, hogs have been trading higher all day long in the face of all the weakness that the cattle exhibit here. And we have June lean hogs currently at 80.60. They're actually firming up a little bit, and now we're up $1.12 on the day compared to yesterday's close. July up 95 at 81.15 per hundredweight. So technically speaking, it looks like they're pulling the hog market out of the fire, maybe?
They are, but I would be very cautious if you're going to be a buyer here. 80.65 to 80.95. There's several technical levels that come into play. We have the early April highs. We have the 50-day moving average and another one of those Fibonacci retracement numbers, all in between that about 30-cent gap. So I think this is going to be a spot where you start to see some long liquidation as a real possibility. Maybe some downward pressure back towards 77, 78 area.
Interesting. All right. Well, thank you, Oliver. Good to visit with you, and I'll talk to you again soon.
Thank you.
OlverSloup with iiTrader in Chicago. Interesting stuff. Man, there's a lot going on, Janet, in the markets today. That $80 benchmark, if it closes above that, analysts say that could be significant. We'll see.
Okay. Well, it seems like Oliver is pretty excited just to talk about the markets today.
Yeah,
so
yeah, you bet.
A trader's dream, I suppose. Thanks, Marlon.